Welcome to Explain the Charts, your go-to source for unbiased market analysis. Today, September 23rd, 2025, we're turning our attention to Invesco QQQ, the ETF tracking the Nasdaq 100, which has been making headlines with its relentless climb. Looking at the daily chart, spanning from May 2024 to present, we can immediately see a significant, sustained uptrend, with QQQ moving from the low $440s all the way past $600. The broader market sentiment remains incredibly bullish, largely fueled by a few key narratives. Most notably, the artificial intelligence boom continues to drive major tech players, with Nvidia announcing a staggering $100 billion investment in OpenAI, propelling its stock to near all-time highs. Alphabet, another Nasdaq giant, has also achieved a new all-time high, pushing its market capitalization beyond $3 trillion, a testament to its accelerated product development and Gemini AI adoption. These individual company successes are certainly contributing to QQQ's overall strength. Adding to the bullish outlook, the Federal Reserve is widely anticipated to cut interest rates, with traders pricing in a high probability of at least a quarter-point reduction this week. Lower interest rates typically make equities more attractive, especially growth-oriented tech stocks dominant in the Nasdaq 100. However, it's not all smooth sailing. While QQQ extended its record streak on Monday, September 22nd, with a 0.6% climb, there are underlying economic signals to monitor. The Empire State Manufacturing Survey, for instance, showed a sharp decline in September, retreating after 2 positive months, which could signal broader economic slowdowns. Also, trade tensions and antitrust probes, like the one China initiated against Nvidia, present potential headwinds. Despite these cautious notes, the overarching sentiment is one of robust growth, with a bullish Wall Street outlook for cyclical stocks and small caps, bolstered by the Fed's expected easing cycle. Let's zoom in on the daily chart from early March 2025 to visualize this remarkable recent rally more closely. Since March, QQQ has ascended from around the $490 to $500 level, steadily pushing higher to break past $600. This sustained upward movement is indicative of strong buyer confidence, with dips being quickly bought up. We can observe consistent higher lows and higher highs, a classic bullish trend pattern. The key support level during this run-up initially formed around the $550 to $560 range in July, which held firm before the next leg higher. Currently, the psychological level of $600 is acting as a new area of support following its recent breach. Volume has generally remained healthy during this ascent, confirming conviction behind the price action, especially on breakout days. Now, let's examine the immediate past, specifically yesterday's trading on September 22nd, 2025, using the 15-minute chart to capture the intraday dynamics. The news reported that the Nasdaq climbed 0.6% yesterday, extending its record streak, and this granular view clearly reflects that. Early in the day, QQQ found support around $596.50 before making a strong move upwards. We can see a consistent upward grind throughout the trading session, with minimal pullbacks. The $600 level, which was a significant psychological resistance, was breached and retested as support, confirming its newfound strength. The price action culminated in QQQ closing near its intraday highs, around $602.24, validating the record highs narrative. Intraday volume appears robust during the upward pushes, indicating active participation from buyers. For day traders, observing these 15-minute patterns is crucial. Pullbacks to key intraday moving averages or prior resistance turn support levels, like the $600 mark, can offer potential entry points during a strong trend. Returning to the daily chart, we can outline crucial support and resistance levels for the short and long term. On the upside, the current all-time highs above $602 present immediate resistance, and continued momentum could push QQQ towards $610, then potentially $620. On the downside, key support levels would be the $600 psychological mark, followed by the previous consolidation area around $585 to $590. A more significant, longer-term support resides around $550 to $560, derived from previous highs in July 2025 and earlier in November 2024, which proved to be a strong bounce zone. Any reversal would likely see QQQ retesting these levels, with increased volume on a breakdown suggesting a deeper correction. The primary trend is undeniably bullish, making it more likely that these supports will hold unless a major bearish catalyst emerges. Traders should monitor these levels closely for potential entry or exit points, adjusting strategies based on how price reacts at each zone. Now, let's briefly look at the 1-hour chart from early September 2025 to see how short-term movements unfolded prior to the most recent surge. Please note that this data covers up to September 10th and may not reflect the latest intraday dynamics relevant to today, September 23rd. During this period, QQQ showed a general upward bias from the low $560s to the high $570s, but with noticeable intraday volatility. For instance, around September 5th, we see a sharp dip from near $580 down to $572.50 before a quick recovery, highlighting the rapid nature of short-term trading in tech. While the general trend was up, these hourly fluctuations offered opportunities for those trading tighter ranges, using intraday support and resistance points. This illustrates that, even within a strong uptrend, short-term reversals and consolidation periods are common, offering distinct trading possibilities. Volume on the 1-hour chart often spiked during these more significant movements, signaling increased interest and liquidity. In recap, QQQ is riding a wave of bullish momentum, fueled by strong tech earnings, especially from AI leaders like Nvidia and Alphabet, and the anticipation of Federal Reserve interest rate cuts. The immediate price level to watch for resistance is the current all-time high around $602.50, and beyond that, we could see quick moves towards $610 or even $620 if momentum persists. Key short-term support lies at the $600 psychological level, which previously acted as resistance, now expected to hold as support. Longer-term support can be found in the $585 to $590 range, and more significantly at $550 to $560, which has proven resilient in the past. Bullish conditions are highly likely to continue given the strong narrative around AI and expected Fed easing, with a 70% probability of further upside in the near term. However, a break below $600, especially on high volume, could indicate a short-term reversal, potentially testing the $585 to $590 area. The likelihood of a significant bearish reversal is lower, perhaps around 30%, but market participants should remain vigilant for any escalation in US-China trade tensions or further negative economic data, like a continued decline in manufacturing sentiment. Important upcoming catalysts include tomorrow's speech by Fed Chairman Jerome Powell and the release of any new inflation or labor market data. For traders, consider long entries on pullbacks to identified support levels, setting tight stop losses, and taking partial profits at new highs. For long-term investors, QQQ remains an attractive vehicle for tech exposure, but dollar-cost averaging can mitigate risks associated with current elevated prices. Always remember to conduct your own due diligence and manage your risk effectively.